All right, welcome back to another episode of the Investing with TJ show. Thanks again for tuning in. We are back after a long break. I basically took a bit of a break for a multitude of reasons. One of them being I was falling a little bit behind in my studying for the CFA, so I wanted to just take some time to study a lot more and get caught up on. I'm on the financial statement analysis and corporate issuers section. So don't want to bore you with that. But today we're going to be talking about the latest CPI print, silver, and where we could be heading with the shiny metal. Now, before we get into that, please hit that subscribe button down below. I think I'm kind of getting shadow banned, but for those of you who have been following recently, I really appreciate your support. And while you're down there, please hit the like button to get this out to more and more silver stackers. Now, this morning at 8:30 Eastern Standard Time, we got the latest CPI print of 6.8. Now, my lower limit for CPI in November was 6.10, and we got 6.8. My lower limit for December is 7.22. If CPI has really increased dramatically in December, it won't have to contend with higher base effects compared with November. 1.4% last year in December, 1.2% in November. By not having to compete with higher base effects, I mean, yeah, it'll be, 20 basis points higher, but pretty negligible when you consider the fact that next year we're gonna have to contend with some way higher prints. But currently, for December, when we get that in January of 2022, the denominator isn't really gonna move that much. But we do know that the numerator will probably move pretty significantly. So I do feel pretty confident that, hey, my lower limit might be on the money, and who knows, we might get 7%, we might get above 7.2%. Let me know what you think December's will be in the comment section below. I'm curious to see what you guys think about that latest print. Beverly Smith actually got pretty close. I asked in the community tab on my YouTube channel what people thought it would be. Beverly said 6.89, and she was pretty close. Now today, what does that mean for the price? Well, as you can see, silver started out pretty low and it was looking pretty rough over the course of the last couple of days. We just saw a lot of selling, and also even before that, just a lot of nothing. I mean, we were going up or going down, but it wasn't really doing much. And I'll talk about that a little bit later after this. But after the announcement came out, we got this huge run up. And I actually made a tweet later saying, hey, don't get too excited because we might actually have some mean reversion, meaning that, or alluding to the fact that many institutions like to use, big economic print days to essentially make a quick buck. They know people are going to get excited either way, and they make their bets and they say, hey, let's run up this price. When people start getting in and we get a lot of liquidity, let's get out and sell. And then you start to see a mean reversion happen. Now, that happened a little bit more with gold today than it did with silver, though it did come down compared to where it was at around, close to, what is this, 20? Yeah, a little bit above, 2022? Oh, 22. And right now we're at 22.16, 22.18, kind of going up and down right now. But we are closer to the highs than we are to the lows of the day, which is great to see. Now, recently I've been looking, and this is another reason why I kind of wanted to take a break. I wanted to step back a bit and take a look at just the overall macro view of things. Like, what exactly is going on right now? I actually had a discussion with a guy on Twitter who follows me. I think he also watches some of the YouTube videos, but he was even saying like, hey, last year, gold and silver did really well with the anticipation of the inflation that we would see this year. Now, he also says, given that fact, it was already put into the price. Now, you could also say that, this year, we did have some just random things that came out of nowhere, things that were out of our control with, Delta getting in the way. And with all of that happening, it gave rise to the DXY getting some strength. And then around that same time in August, then there are talks about the taper. So then it gave the DXY even more strength. So, it's just been a hard, long fight with the DXY, especially towards the end of this year with silver and with gold. Now, taking a look at, or just considering that, and also considering what this guy said regarding assets pricing things in ahead of time, which is true, assets do that. Let's run with that. What does that mean? Well, we do know that a lot of people are looking at the Fed and saying, hey, the Fed may be looking to taper. Now, we all know that they won't be able to do things very aggressively. We know that if they even consider raising rates, it won't be that aggressive. We know what happened in 2018. However, they may make an attempt and, they may reverse course, but they may make an attempt. And that is what markets seem to be pricing in right now, which is, hey, the price levels are running really hot. And again, think about the dual mandate of the Fed. There are a lot of things that they could take in consideration, but they have two dual mandates, which is making sure that they, keep control of price, and then also making sure that unemployment is at a, decent level. And with inflation running hot, this is kind of where the dual mandate comes in. This is like one of the primary mandates that most central banks take in consideration, which is we got to stamp out inflation before things get too crazy. So I wouldn't be surprised if with that, the dollar rising is in anticipation of even in addition to the dollar rising, getting to the 96 level, you also have, as almost a confirmation as well, you also have shorter term maturity government debt yields rising aggressively. That is giving strength to the dollar, such as the 2-year note yield. As you can see here, the 2-year has been rising pretty dramatically. Actually, this is the intraday. Let me go over to the annual over here, and you'll see what I mean. The way that the 2-year has been moving over the course of the last couple of months has been pretty aggressive, and it really started happening in September when a lot of those talks were coming out about the Fed tapering. So essentially what I'm trying to say here is that there seems to be a lot of money flowing into bets on the Fed tapering. And with that, there seems to be less money going into assets that would be on the opposite end of that. So what does that mean for silver? Well, currently right now, silver is at $22. So it, is taking that into consideration. And I think that's a good sign, honestly, with the DXY rising up to 96, getting close to, some near or nearer term highs in the past few years. Silver's at $22, which is pretty good. Back when the DXY was that high, pre 2020, silver was way lower. So we have some strength here. And again, taking a look at my forecast model, my lower limit right now, considering the ending prices of November and including the new CPI print, the lower limit is at 21.36. The central limit is at 24.66. We are closer to the lower limit, which isn't, exciting to see, but at least we aren't below that. And again, this is based off of my data here. So what will happen, or what is the bear case and what's the bull case? I think right now things are looking pretty decent. The bull case is, hey, if we start to see everything continue to rise with CPI and, gold continues to move positively, we see SLV get some volume, we start to see maybe the dollar start to weaken a little bit, hopefully, then I think we do have a chance of seeing this band, this lower, central, and upper limit move up. And with that, give some buoyancy here to silver, for silver to move higher. Now, again, for those of you who want to get access to this, you can do that with a link down in the description below and in the first pinned comment in the comment section. Just want to give you that quick plug and get back here. So essentially, that's my bull case. The bear case obviously is, well, what if the dollar continues to rise? What if it just continues to gain strength? What if shorter term, treasury yields continue to gain strength? Well, then there's the case that we may see a little bit more weakness. But right now, as my data stands, I would say the lower limit is going to be around $21. I don't see it going below that at this current moment. But guys, let me know what you think will happen in the comment section below. Thanks again for watching. Please hit the like button and please subscribe if you're new. It's Investing with TJ.